Hello friends, this is Raj Sastry from Raj Option Trading. Today is June 27, 2021. Let's take a look at the stock and option purchasing ideas for next week, which is week of June 28, 2021. So with that, we'll leverage a TTM Squeeze indicator from John Carter. This is a great indicator to identify the stocks that are about to break out. You could buy stock or call option with this idea. You could also go short, but we'll not cover short in this segment. Let's cover purchasing stock and options. So with that, here's the list of stocks. The way this is organized is I got the ticker symbol here, the company name, price, and we got market capitalization, sales and sales growth. It's very important to have a nice sales growth and gross margin, very important. Then we got institutional ownership. It's good to know institutions are supporting the stock. Then we got short ratio, the price basically PS ratio, price to sales ratio. It's a great valuation indication. Then we got IV percentile that tells you if the implied volatility rank is high or low at this point. Then we got the trading volume. We got to make sure trading volume is pretty significantly high, so that way we don't end up in any situations where liquidity is low. Then we got three more columns here that tells you, is there a TTM squeeze? Is there a 1 day squeeze, 3 day squeeze, 1 month squeeze, or a 1 week squeeze? So the moment there is a squeeze, then you can try to identify, is it going to fire on a higher side or a bullish side or a bearish side. If it is bullish side, then you can buy stock outright, or you can buy call options or call spread. Then we got earning date, when is the next earnings coming up, and how is the performance on a 1 month basis, 3 month basis, 1 year, and also what's the difference between 52-week high and the current stock price. So with that, let's jump in here. At the top, we got SOFI. SOFI is a fintech play. They just became IPO a couple months ago using a SPAC merger. Stock price is at $18. And then you got Salesfor.com, Mark Benioff's company, and a couple more companies as you can see here. So the companies indicated in light green background here are the ideas where you can buy stock right now or call option or call spread. We'll look at a couple of these and look at Thinkorswim platform to see if we can buy some of these. So with that, let's first look at SOFI, ticker symbol SOFI. So with that, I'll go to Thinkorswim platform here. So SOFI, so let's go here. I'll say SOFI. So as you can see here, from a TTM squeeze indicator perspective, SOFI has shown a small a red dot here. So this is a daily chart, as you can see here, 1 year, 1 day, and we got a red dot here, and there's a red line forming here below. And as you look at the shorter term A wave, you can see here the lines are below the histogram. If you look at the longer term wave here, you can see the lines are above the histogram, but there are some dark blue lines forming. So typically, this type of pattern, John Carter kind of thinks, it's good to go long whenever the long-term wave here, which is called C wave, is above zero. So, with the SOFI, which is a great, SPAC, and which is a great fintech play, stock is kind of falling out here. Per this indicator, it's a good time to buy, even though we see some weakness with the dark blue lines forming here, but still the oscillator is above zero. That's a buy signal. As we scan through here, we don't have any indicator in either 3 day or 1 month, or even 1 week or 1 month. So let's get a little more confirmation. Let's go to one more chart here to see what we see in this chart. As you can see here, SOFI stock has been kind of not doing that great. As you can see here, it's fell off a little bit, I think, last Friday. With that volume, as you can see here on the balance, volume is also dropped, which is very typical. RSI is kind of going down. It's also typical when the stock drops. Check-in money flow also indicating lower. And if you look at the DMI, we got a bearish crossover here, which is basically saying, you know what, watch out. At this time, there's a, this stock is in a bearish territory. So with that, what's going on here is really, basically chart is telling you get out, not a good time to buy. But if you look at John Carter's indicator here, it's kind of saying it's okay because the histogram is above zero, even though there is a little bit light dark blue line forming. So with this, this is not a clear signal. Even for John Carter, if it is a light blue, then it's a clear signal to buy. In this case, it's not a very clear signal. But typically, what I like to do in these scenarios is really buy some stock instead of options. That's always a great idea. Stock being at $18, you could buy some SoFi stock at this time. Taking advantage of this negative, stock fall dropping off. So with that, if you go to stock, the option chain here, you could go and buy some SoFi. So with that, let's go here and reduce this. So SoFi is trading at 1850. You could buy some stock outright by clicking ask here. You could buy some stock right here. If you are a contrarian, you could also buy some call option or a call spread. So with that, if you want to buy call option outright, you could do delta 70 somewhere here. Delta 75 is good enough. You can buy just this here $15 strike, 15th October, 110 days out. You could buy this outright. If you send this, your profit is infinite and your break-even price is 2060, which is above the current stock price. If you don't want to take that much risk, you could also do a spread here. Stock being at 1850, you could do a couple of ways. You could do 15-20 spread if you want. That's a little bit smaller spread. You're not spending too much money here. So if you do that, so 15-20 spread, 15-20. So you're paying $2.08. Remaining portion of $5, that's your profit potential. So if you confirm and send here, you are paying $208 to make $292. So you are more than doubling your money. It's a very good trade idea. You could go from there. So next trade idea, as you go here, we could look at CRM. It's a Mark Benioff's company, Salesforce.com. So with that, if I put CRM here, so as you can see here, it's a $241. It's a high price stock. It's a great stock. So as you look at the chart here for CRM, so as you see here, its implied wall is 11.6. It's the IV rank, which is a low IV rank. On the balance volume is pretty steady. That's a good indication. RSI is 57, pretty strong, as you can see here. Right now, it's a bullish from a DMI perspective. The blue line is above red line. That's a bullish signal. On the balance indicator, check-in money flow is telling you money is flowing out of the stock. So now if you go to indicator from John Carter, so as we see here, we got a red dot forming here in a daily chart. It's a 1 year, 1 day chart, red dot forming. And if you see here on the shorter term A wave, the line is a little bit red lines here, but above zero. More importantly, the longer term A wave clearly above zero. This is a bullish indication, per TTM indicator. So you could, you could really buy some call option with this indication, and you could also, if you can also buy stock outright. So with that, let's go to the option chain here, CRM 241. If you want to buy stock outright, you could just buy at 241 by clicking ask here. But if you want to buy call spread here, you can go to Jan 21, 208 days out, which is good enough, and go around 240 or so right here, 240, 250. So right now stock is at 241. You could actually, because it's at 241, you could buy 230, 240 spread. That's a better way, conservative way to play. So you could just buy this. So 230, 240. So you're paying $5.48. It's a $10 wide spread. So remaining portion of $10 is your profit potential. You're a little bit, it's not double your money type trade. You're a little bit less than doubling your money. You pay 548 to make 452. Your break even is below current stock price. Break even is 235. So this is a good trade. You could go execute this trade and go from there. And if you want to, buy a little more wider spread, you could do that too. You could do 230 and 250 spread. It's a $20 spread. So if you do something like this, you're paying $10.43. You are almost doubling your money, not quite. Here break-even point is 240, just below the current stock price. So this is a different way to play. You could do this one too, but the previous one, 230, 240, is a little more conservative. You could go something like this with the CRM. But if you want to buy just call option, you could do that too. If you just want to buy call option, you could do delta 70 somewhere right here at 210 and pay $35, as you can see here, and buy this. Your profit potential is infinite. Your break-even point is a little higher than the current stock price. So this is a little bit risky. You could do this if you have a bigger account, or you could do 230, 240 spread. So with that, let's look at one more idea here. Um, as you see here, we got ACC, BGS, same story. I will go all the way down here and look at one or two more. For example, let's look at Kopin, KOPN, low dollar stock. Let's go back to here, Thinkorswim, and put KOPN. So Kopin does not have any call options, which is not bad. So let's go here to the stock chart here. As you can see here, Kopin stock has been up and down. As you can see here, there is a good movement. Right now it's down last 2 days continuously. On the balance volume is pretty steady. Right now it's trying to a little bit, dropping off. As you can see here, RSI is around 46, which is at a stock is sold off. It's below 50. That tells you stock is sold off. Right now we got a bearish crossover in the DMI. Red line is crossing over the blue line. It's a bearish crossover, and check-in money flow is telling you money is flowing out of the stock. And if you go to John Carter's indicator here, TTM Squeeze, we got a squeeze forming in a one-day chart here. And as you scan through here, there is a squeeze probably forming here in a weekly chart here. In both scenarios, as you can see here, the longer term C wave is above zero, even in one day chart as well as the weekly chart, same story, it's above zero. So with this, you could initiate a long position for Kopin here. Kopin, since there is no option, you could buy stock outright. You could just go here, ask, and just go buy some stock here and hold it for a long time. And I think this will do well. Now we'll go back here to Thinkorswim, and we got two more here. Maybe let's look at HIMX here. It's a $14 stock, and it's right now it's 21% off of its 52-week high. So with that, let's look at HIMX. So this one also has no options, which is okay. Let's go back here. If you look at the chart here, HIMX, as you can see here, right now stock is at $17 and RSI is 42. Stock is oversold at this time. Bearish crossover here right now. And from a volatility perspective, I think we have volatility is pretty low. As you can see here, it's about maybe 30 or so. So with that, let's go to John Carter's TTM Squeeze indicator. As you can see here, HIMX, we got here monthly, we got some dots forming here, and shorter term A wave is below zero, but the longer term C wave is above zero. So with this, we could buy some HIMX here and go from there. HIMX is $17, very low dollar stock. You could just go buy HIMX and hold for a while. Oh, it's the HMAX, not there you go. HIMX Technologies, HIMX. Yeah, this does have option. I think we looked at a different one. Let's look at HIMAX, the proper right HIMAX. So if you go to chart here, HIMAX, as you can see here, nice looking chart. The bullish from an on the balance volume perspective. RSI is pretty steady. Right now, from a DMI perspective, it's bullish, and also nice from a check-in money flow perspective. Very good. RSI IV percentile is 27. So if you go to TTM Squeeze chart here for the high max, we got a daily squeeze forming. The A wave is kind of above zero at this time. C wave is above zero. That's a great indication. And there's also a squeeze forming in the weekly chart. And A wave, C wave, longer term C wave is above zero. With this, it's a bullish indication. We could go to the um, option chain here. We could buy stock outright at $14 here, or we could initiate a call, buying a call here. Right now, you could do delta 70 call. We got delta 81 here. You could buy, $10 strike call here, expiring in Jan 22, and you just pay $4.80. Infinite profit potential. Your break-even price is 14.80. So if you want to buy spread, you could do that too. Stock being at 14, you could buy. There is no strike beyond 14. I think in this scenario, you could buy stock outright. That's a better idea. Or you could buy a call option at 10 strike. Both will work well. We'll look at one last one here. Probably, let's see here. Um, let's look at Sorrento Therapeutics, SRNE, which is a great meme stock. With that, let's give SRNE. And let's go to a chart here. SRNE is trying to go up, as you can see here. It's trying to, it's above its 50-day, 25-day, and even 9-day moving average. That's a good sign. Right now, RSI is indicating it's going to oversold position here, and DMI, it's a bullish clearly. Money is flowing into it. Right now, I see some line, a little bit drop off here. So with this, for Sorrento at this time, even though there is a bullish indication, um, I would not trade this at this time, mainly because RSI is in the oversold territory here. I would not do anything here. If you look at John Carter's monthly squeeze here, this is squeeze, but as you can see here, we got some of these dark blue lines below zero. So I would not trade at this point. I would wait and trade later, especially because it's below zero and RSI indicates it's overbought at this time. So with that, thank you very much. So if I go back here, this is a list of all the stocks that you can look at and initiate. If it's above zero, you can initiate a buy position for these. You buy even either the stock or call option or call spread. So with that, thank you very much. Happy trading.